Good afternoon, traders. In this Sunday video, I will show you how to analyze charts and how to trade it with Elliott wave principle. There are just two wave types in the market: motive waves and corrective waves. The first thing you have to do when you analyze the chart is to find the first impulse, the first motive wave. If we compare these two waves, this one and this, it should be clear that there is an impulse, strong motive wave, and there is a correction after that. Let's make it clean and remove these lines and add these two trend lines, this one and this one. So impulse, correction, and as you know, when correction ends, you can expect the next impulse into the same direction as main trend. So our main trend is bullish. Around 2 months ago, I prepared for you this chart, 3rd January, that we have an impulse, then correction, and we can expect the next impulse after the breakout. And now the question is how to find this breakout, because market several times tried to break this trend line, for example here, and how to find this right moment to enter the new bullish trend. Now let's focus on this part of the chart. We see that market moved up and tried to break this trend line, but it bounced down, and then we see this consolidation. Now it would be even more interesting to draw this trend line like that, and it's even more visible that it is bullish consolidation out of this trend line, and it's exactly what I sent you a month ago, that there is a bullish consolidation and we can expect the move up. After that we have more detailed chart with wave 1 and we expect ABC correction, wave 2, and the next impulse to the upside. Okay, let me switch to this chart, and now we have to go to 4-chart time frame. Everything before that was just chart analysis to find the new trend, new direction, and be ready to trade it. And now will be more interesting part, how to trade it. So we see first impulse up and then market makes a correction. Let's label it together step by step. We can mark this first wave to the upside as wave 1, then we can expect wave 2, and then 3, 4, and 5. Let's stop here. Wave 2 is ABC correction. For sure at this moment I couldn't know exactly that there is a bottom of wave C. It could go down like that, that's all. So how to trade it? We have to wait the next wave up, first wave, on smaller time frame, smaller degree. And now is very important moment. We are still out of trade. We see this potentially first wave to the upside. It's still our assumption, we don't know exactly. Then wave 2, and according to the theory we know that we can expect the strong third wave to the upside. I waited first and second wave to reduce our risk, because the invalidation level for second wave is the bottom of first wave. So if we buy, for example, here, our invalidation level will be here, so risk is big. If we wait for smaller time frame, wave 1 and wave 2, we can reduce our risk to this level. And this is exactly what I did in premium service. We found the top of first wave on 25th January. Let me show how it looked. 25th January, 1, 2, 3, 4, and 5, wave 1, then ABC correction, wave 2, then first wave and second wave. I expected that second wave will go to the 50 or 61.8 Fibonacci retracement. I used the top of first wave as confirmation level to buy, and there is important if market reaches the confirmation level, then move the invalidation level, it's our stop loss, to the bottom of wave CF2, so here. In this case, you reduce your risk from this level to that level. After that, everything is much more simple. You just need to draw the trend line through the bottom of first wave, bottom of second wave, and top of first wave. It gives you really good trend line. And you can trade to the upper boundary of this trend line with moving your stop loss higher and higher step by step when the market is moving. Let me show how it happened in premium service. Market activated our confirmation level to buy, so we moved stop higher like that, and then we just move step by step with market. Market moved up, and we move our invalidation level higher and higher. What the main idea I would like to show you here to summarize what I said before. Always wait for the impulse on the smaller time frame to reduce the risk. In this case, you have big risk, but you reduce it to have a smaller if you wait for first impulse up. The same was actual here. First impulse up, correction, and the next big impulse. First impulse up, correction, and the next big impulse. In this case, for these three trades, you have very good risk-reward ratio, because your risk is much lower than your potential reward. It's obvious without any estimation. For example, this impulse was on 10th February. Let's find 10th, 11th February chart. Let's switch to the 10th. Okay, February 10th. We saw this first impulse, then wave 2, wave 3, and don't rush to buy. Wait for a bounce from the trend line and my confirmation to buy. If it will fall, don't risk your money. The market is difficult now. Yes, it was very hard drop. It was ABC correction, but this wave C was very, very strong. This is why I asked to wait for the bounce up. The next day, market gave us this bounce to the upside, and the same story. I use it as potential support and resistance level. I like these levels, and I like to combine this price action strategy and Elliott wave strategy. Our invalidation level for wave 4 was on the top of first wave, but if market confirms uptrend, then move your stop to wave C of wave 4. So here, to reduce our risk if market reaches this confirmation. So the next day market reached this confirmation and moved up, and we move stop to the wave C and step by step to the upside every day. I highly recommend you always wait for small impulse up and correction and then trade. Market almost always makes this correction before the move up. You can reduce your risk and you can avoid unnecessary trades, because it's always possible that after this impulse up, market will go down. After this impulse up, market can go down. And here, so if you use this level as confirmation, this level as confirmation, this level as confirmation, your risk is small, your risk is small, your reward is big. Sometimes you will miss the trades, and sometimes market will move like that without correction, but it's much more rare case than when market makes a correction. For example, we can open the last chart, AUD/USD. Okay, AUD/USD 4 chart time frame. Yesterday I posted on Instagram the bigger time frame for this chart. Now it's 4-hour. For example, here market didn't make a correction. It dropped like a knife without any corrective moves. So I missed or I skipped this trade because I need to find the better entry. It's quite risky to sell here, here or here because at any moment market can start a corrective move. I always wait for correction. Sometimes market will go like this and you can miss this trade, but don't care about that. It's not the common case. And we can open the pound USD, the same 4-hour time frame. When market finished this up move, wave 1, wave 2, 3, 4 and 5, then what we see? First move down and then correction. So you have invalidation level and you have confirmation level to sell. You reduce your risk and market can go down. I hope it was a useful video and you get extra understanding how you can improve your trading with Elliott waves, that it always makes sense to wait the correction to reduce your risks. And for sure, it's always important to understand where is your invalidation level, at what point your forecast is not valid anymore. And you don't need to follow all this fundamental news. You don't need to read articles about Great Britain because chart and price know everything is about the market. You just have to learn how to read the chart. Have a great weekend. See you tomorrow.